Hello, my name is Carlos Recorder CPA, and today we have another stock analysis for you. Today we're going to look at Costco, the great warehousing retail giant, and look at their growth. And we want to see, is this company a quality business? And also at the end, we'll look at the valuation to see if this is a good price for us to get in on this company or not. So let's take a look into this business, Costco. Ticker symbol COST, cost. Right now trading at $972 per share after hours. Today is April 16th. Looking at the 5-year chart, we see consistent growth. Looks like we had a great opportunity to buy in the 21-22 range, even into 23. But ever since the end of 2023, they have a solid uptrend right now going up to a 972. Let's look at a few stats. Right now, the market cap, $429 billion business, a beta of 0.94. So we see this is a lower volatility stock. PE ratio of 56, kind of high. So let's look to see if this is company. It commands a high PE ratio right now. $17.10 earnings per share. Looks like a dividend yield of $4.64 as of now. So let's take a look at the revenues of this business and get right into it. So over the past 5 years, we're looking at a 10.9% growth rate on average. So medium growth, positive every year. So no down years. Revenue has grown each year. Looks like as of late, we have some single digit growth, 6.85 in the trailing 12 months. Their fiscal year ends in September. So when we look at 24, that is September 2024. Trailing 12 months is starting to slow a little bit to 3.8. So is this a sign of what's to come as this growth looks like it's starting to slow down a bit? Looking at gross profit, pretty consistent around the 13% every year. We have some 12.1, 12.3, 12.6, and trending at 13.3 right now for 2025. So pretty consistent there. Looks like they're holding to their solid gross margins. Now, this company, as far as being a retailer, does have stronger margins than their competitors. They are number 3 behind Walmart and Amazon, but they have better margins than both of those entities as far as their retail space. So let's go to profit. So revenue is going up consistently. Profit, we have 1 year with revenues decline in 2016. Other than that, solid growth. We have 1, 2, and potentially 3 single growth digit years. Or single digit growth years. So we'll see how 2025 plays out. But right now, they're not trending as strong as they were before. However, still solid growth here. Net profit margins, 2% going up to 3%. So it looks like margins are continuing to improve slowly here in 2025 and 2024. So solid margin growth. Let's look at the free cash flow. Free cash flow is the cash from operations minus capital expenditures, representing the required reinvestment back into the business. Now, we do have some up and down here as they are taking capital and building new stores. Depending on how many stores they build in each year is going to fluctuate this free cash flow number. However, we're not worried about it because we see that they're taking the money, building stores, creating more value, and continuing to grow that business. So this is not an alarm. A lot of companies, you really don't want to see this, but when it comes to this particular business, these years don't frighten you because you know what they're doing with their capital. They're spending it, building more stores, going into new markets, and growing the business at a great rate. So 1.8 billion down to 643, all the way up to trending as about 6.9 billion this year. So decent free cash flow rate or growth rate, not the prettiest as we see a lot of up and down. However, we know why they have down years, and we're not worried about that because we know they're creating value with that. And we'll look at that a little bit when we look at the economic value added to see how much value are they adding to the business each year. Debt, they keep a solid, or I should say great, debt to free cash ratio. With the free cash they generate, how quickly can they pay off their debt? The debt was 4.8 billion in 2015. Up to 10 right now, 8.1 billion, but look at their cash flow. The cash flow is growing at a similar pace to their debt. So each year, except for 1 year in 2016, they've been able to pay their debt off in 3 years or less. 2.5 years is the most that they've had. So this company keeps their debt balance in a manageable position. If they ever get into trouble for whatever reason, they have enough cash flow to handle that debt. So it's never a worry. So they keep the position of the business in a healthy state. So you can trust that. Now, let's go to the dividends. Costco right now is paying 0.48% dividends per share. Now that might seem like a low dividend to many people. We're not worried about that because we can look at the dividend growth and we see that they grow their dividend every year at a solid position. Over the past few years, 7.6% growth, 12.8, 13, 13, 13. So other than this 2020, they've grown their dividend in double-digit percentage. So most of us don't get that type of raise in our jobs annually. If you're an investor in Costco, they are paying you more money, growing that dividend in double-digit growth every year. Now, one great thing about Costco, they do produce a lot of cash flow for their business model. Now, look what they're doing. You got a $15 dividend. That is a special dividend. $10 here. So every 3 years, they pay out a special dividend. We're saying, hey, we have so much extra cash. We're going to reward our shareholders. We're going to keep paying that dividend, keep growing it, but we're going to pay a special dividend and pay you $10 a share, now $15 a share, because we're going to reward our shareholders with this cash. So companies do this when they don't really see the opportunity to reinvest a lot of that cash at once to get a solid return when it comes to the new stores. So Costco is saying we have enough cash to build new stores. We have enough cash to sustain our business. We want to pay a special dividend every few years. Every 3 years is pretty frequent for a special dividend. And they've done it consistently and grown it. So we do like that. Now, when we look at the payout ratio, this past year, they paid 136% of their free cash flow back to the shareholders. Now, we want to see companies not this high on a consistent basis. They're only this high this year because of the special dividend that they paid. Otherwise, they'll be much lower in a much safer position. I believe their payout ratio is less than 50%. So they are in a position to continue to grow that payout ratio. And of course, we know that the cash flow is going to grow as they build more stores and go into new markets. One thing about this company, when they go into these international markets, a lot of times they're their only warehousing retail space like that. You know, we have BJ's and Sam's, which pales in comparison to Costco. But when it comes to other countries, international markets, there's no other store like this. So they are going into new markets and having great success as they expand in a very smart way. So let's look at shares outstanding. So this is trending in the direction that we don't like. We like downtrends when we look at shares outstanding, but we see an uptrend. Now, over the past few years, minimal growth, not anything to be alarmed about. We do have this big jump here in 2019. So we would need to look at the stock price in 2019 and see were they extremely overvalued at that point, which would be a good reason to sell shares, bring in a lot of capital compared to how much you're diluting the shareholder, and then continue to use that money to grow the business. However, we have to look at that. But again, over these past few years, the company has grown at a faster rate than the share dilution. So this is not anything to worry about. And the stock price could be overvalued now. So they could be being intelligent and just selling a few shares and bringing in some cash. That's not really hurting the existing shareholders at a great rate. So this could be a solid trend. I'm kind of neutral right now on this state. Everything else looks good. But when it comes to shares outstanding, I don't like the uptrend. I think they produce enough cash to not do it. However, this is what management has decided to do over this a few years here, over these 5 years or 6 years. So we'll see. We'll see. Not kind of neutral there, not really a bad thing. But here we go. How much economic value is this business adding? We have the return on capital, and we look at that compared to the weighted average cost of capital. The cost of having the cash on hand to do business. What is your interest on your debt and opportunity cost on the equity that's coming in? We have 22.8% return on capital compared to a cost of capital of about 6.6%. creating value over the past 5 years at an average of 16%. So economically, this business is getting about 16% better every year based on this metric. So we love to see an entity creating value by operating its business, and Costco is doing it at a great spread. So we love it. So let's look at the valuation of this business. So we're estimating Costco is going to grow at about 8% over the next few years. This comes from both existing store sales and new stores opening. They're looking at about 12 stores per year in the US alone over the next few years. The discount rate, we just looked at that, about 6.6%. Now, many times when I do this, if you see my other videos, I do a discount rate of 10%, unless the weighted cost of capital is above 10%, then I use that. But with a quality business like Costco, using their discount rate is above what I would get in the treasury right now. So I like using the discount rate right here. Terminal value, 37 times free cash flow is what I expect to get from this business if I were to sell it anytime in the future. Now, for reference, right now they're trading at 64 times free cash flow. So we're looking at a lot less. So I believe there's some safety there. And the 37 is their average price to free cash flow, average multiple that they've traded since 2004. So I believe 37 is a solid estimate when we're looking at the terminal value as far as what we can get if we were to sell this company, 37 times free cash flow. Right now, the share price was, well, 967 here, but 972 in after hours trading. I estimate the value of the stock to be about 645, giving me about 33% downside to the stock right now. The fair value range is between $581 and $710. That should be a safe range to go in and grab some shares of Costco. If you're a dollar cost averager, again, don't worry about this section of the video. Continue to buy repeatedly, no matter what, whether the stock is up or down. The reason why I would not look for a deep discount with Costco is it's such a dominant brand, such a great business. So the reason why Amazon and Walmart kind of are ahead of them right now is because of the online sales. Costco isn't a strong online retailer, and they really don't have to be to serve their particular customer base. But however, that's an opportunity for them to take in the future. If they were to expand that greatly, I mean, I don't know how many big bulk items you want shipped to your home, but if they were to dip into that space, I think that's a great opportunity for them. However, they really don't need to. They're dominant as far as warehouse retailing where they are right now. And they mastered how to cut so much cost by storing the items, having these big warehouses that are also stores. And that's kind of like where they store right at the point of where the customer is. This is where they store their items. So they're able to cut so much cost on distribution because of that. And this is why they have great margins. And this is why they're a great company, along with their strategy and commitment to keeping their prices down, using their economies of scales to cut costs, and then passing those savings on to the customer. So they stated and they are committed to it, and they executed greatly. I am a member of Costco, so take my positive view with a grain of salt. So of course I'm biased towards this company because of that, but I still believe I'm fair in my analysis in giving them a fair value of about 645. And that's my opinion of this business. So let me know what you think in the comments. I hope you enjoyed this video, and I hope to see you in the next one.